Hello, how we doing tonight, guys? That was a weird song. It was not the song I was intending on putting, but I kind of just wanted to finish it up at that point. I was curious. But let's get back into it, right? Pretty straightforward day, if I'm not gonna lie. We did discuss during the weekly outlook. If you missed that, once again, it is available on YouTube. But everything that we were looking for specifically was outlined in that regard. We were already trading above the previous week high on Monday, of course, and we opened with a huge gap, which is we don't usually see these coming out a tad, but in this case, it is definitely an important part of our trading for the week. So I do want to point it out. Of course, it was fully filled today, but it did offer some opportunities. So we're going to go look at how our new week opening gap specifically would have offered some trades, and also just get back over what we said during the outlook. I said that on Monday, when I don't have a clear bias, I use daily structure and direction to give me an idea of where I want to trade. And I even went in depth and talked about the specific kinds of daily profiles I look for. And today, what did we see specifically? I'm going to remove the 10 a.m. open here just because it is blocking pretty much our daily open. But here, what did we see? We saw open. We traded a little bit down, rebalancing part of this new week opening gap, and then traded higher. This is the manipulation we look for. So we had our manipulation here, and we could then distribute lower. But when at 9:30 here, because we don't have a specific news for the day, right? So when at 9:30 here, we've already expanded quite a bit, right? If you think in terms of profile, we've opened, manipulated higher, distributed lower, but we already ran a bunch. And if you guys want a level to look for, I usually look at it based on the daily open and look for retracements to said price at that time. So when we have already an overnight expansion, this is where I look for a New York open retracement continuation. And that's exactly what we had. Now, of course, it wasn't the biggest of moves, and just overall today was not the most volatile of days, more so of a ranging Monday. But if we look at it, yes, we actually had some pretty nice movement. No London framework was successful, I guess. It was formed, but it was counter bias. In cases like these is when you can say, hey, I'm not going to follow said move. In these cases is where you can look for said things, right? It's counter my bias. So even though there is a statistical probability due to how often we will reach for that London high, well, you have to be able to filter. If you did not, then you would have missed out a little bit, but not the end of the world in that case. Trading above previous day high, trading above everything pretty much. Let me bring the default here. I kind of like seeing the full text. Trading above everything at that point puts us at an extreme premium. So in cases like these, I want to go short. But as I explained, I did anticipate that 9:30 would form a retracement, so we also had opportunities to long. If we look in regards to SMT, of course, a lot of SMT was formed, but only post 9:30. We did have SMT on the highs at this place, which basically gave you your signal that you can turn back to being bearish. Can you please talk about London model and rules if possible? I don't trade London at all. And I don't want to discuss on the London model I have because I don't trade it at all. I was speaking specifically about the London RAID framework, which we actually have in the resources channel. So if you're curious, NJ, just go to the resources channel and you can filter based on tags. You can go to educational content, and let me just find the names. It is called Statistical Range Frameworks, and it is June 25th price action review, where I outlined everything about those statistical range frameworks and how I use them. So if you want more details, you can definitely go there. My pleasure, my pleasure. As I said, SMT on the highs, that gave you the signal that, hey, I can now turn bearish, right? After our opening retracement. Definitely one thing to look for. Also, our daily open on NASDAQ gave you a point of interest to look to short. We did trade a tad bit higher here, right? 10 handles, but that is normal, within normal limits. In this case, we also had bearish SMT that was formed on this 11:15 candle. So I do want to just mark it out before we dive down to our 1-minute chart, because that is important for us. Here, I'll get this guy a little less intense just so we can see. What if I do this 2%? Even a little bit less. Let's just do, you know what? Let's just remove the fill. Why not? So we'll have our lines. Let me actually bring our lines. Instead of using the fill, I'll just showcase it with the lines too. So we have NWOG high and low. These are my trading settings. I kind of like having the text here for when I'm reviewing, but in cases like these, like for example, now it overlaps with the daily open. I'm just going to go ahead and remove the daily open in this case. New week opening gap right here, we do have 50%, and we do have the quarters as well. 9:30, what do we look for? Judas swing, right? Did we really have that today? Not really, right? You can frame this move as a Judas swing, but for me, the Judas swing occurred after, and it was confirmed because of the SMT. How do I know that this move lower is enough of a manipulation? Because of the SMT formed between both correlated assets. This is how I can trust it. So from this point on, I can look to long. Now, of course, the long came a little bit earlier. I personally took it because everything was present for me to look for a long, even though we were missing our key Judas swing. So was it a perfect setup? It was not. Did it offer enough risk to reward? Perfectly enough risk to reward for me to take this move. So very, very small trade here, looking to return to the new week opening gap high, which in this case I was framing as the daily opening price. And after that part, we did have SMT, right? So as soon as we broke above here, which is this high, this pre-market high right here, as soon as we broke above, now all of a sudden we have SMT, and I am no longer bullish, right? So I was just looking to trade a bullish retracement, but being bearish due to the daily structure as we discussed at the beginning of this call, right? So from that point on, I'm looking to short. So no, I am not looking to long this bullish breaker, because as I said, as soon as this high gets taken and we have SMT, now all of a sudden, my bias is short. I'm ready to have that continuation we were talking about. The first short setup that was provided was off of this inversion fair value gap, and this initial breaker block had the 3PD array with this inversion fair value gap. The fair value gap above was not yet formed, so it would be all the way at the invalidation here, which allows for this fair value gap and this order block. So pretty wide stop for a day that didn't move so much, but as you can see, it did still offer plenty of risk to reward. My final objective for me was just fully filling the gap, but I also was looking for partial at this level. Now you might ask, Ollie, why are you not looking at partial beforehand? Because this is all low resistance, right? And even on ES, we do have these relative equal lows. So I have no defense that stops an energetic price move to go through all of these levels. So for me, it is just inefficient to take profit before then. I'm just leaving money on the table. But after this swing is taken and we filled basically 75% of the new week opening gap, right? This is our dotted line we see right here, the 75% level. Then after that point, now all of a sudden it's a little riskier. So that was my first partial, 2.17R, still on the smaller side of things, but quite happy with this. And final TP came right after. I fully closed the trade, did not intend on leaving any runners for 3R. So even with a little bit of a wider stop and less daily movement, still allowed for plenty of return. And as you can see, your first long that was offered was a success, and your first short that was offered was a success, right? That's the first bearish breaker and entry that allowed. So no matter your bias on today, you should have made money. If you did not, then it's not about the setup. It's about trade management. Perhaps it's about emotions. You know, there are a lot of things we can get into. But truth is, both first Rise model setups that were formed were valid and were successes, even if it was a small one. See, my long, I took profit at this level, and then I got trailing stopped right here when we formed the bearish breaker and basically flipped. So I don't recommend for beginners to flip bias like this. Truth is, you should have just traded one of the two. But for me, after trading it for, I mean, almost 2 years now, right? In like a month and a half, it will be my official 2 year mark of trading. I started full time September 2023. Well, semi full time, but 2 or 3 months later, I was actually full time. So yeah, I've been doing this for a while. So yes, I allow myself to flip biases. We're not going to talk about any potential setups within this because, once again, if you traded the model correctly, you're short here. So why would you be considering perhaps a long here or perhaps even a short continuation here? I mean, there are valuable opportunities, but for me, it's just FOMO. I think I've spoken about that before. If you miss the first entry, I prefer to miss the whole move because I should have been in that first entry, not trying to squeeze a continuation out of a move. So that's just personal opinion. You do not have to follow that at all, but that's how I personally like to trade. Give me a second, guys. I just saw a fucking spider on my wall, and no way was that spider going to live. So I just had to kill that motherfucker very quickly. There we go. My bad, guys. A little bit of a distraction there. The breaker block on the long is the 930 candle. I struggle with IFVG unicorns. No, it is not. It is not. So if we just zoom in right here, you'll notice this is a valid breaker block. This is a valid breaker block as well. So those are the candles that we are looking at. And as you can see, this inversion fair value gap overlaps plus or minus our threshold, right? I think I've spoken about this before, but personally on NASDAQ, I use a 12 handle threshold, which means that it has to be plus or minus 12 handles to be overlapping. A day like today, that is not very volatile. That is quite a large overlap. But if we look at the high of this breaker, it means that this would be it. So even if the fair value gap was there, it would consider it a unicorn. Rip Spider, yes, sir. Any comments on the lunch trade? Yeah, we'll get into that right away. Just wanted to speak about the morning session first. And if you struggle with IFVG unicorn speak out, truth is, this is like the number one thing. I took on a few students a long time ago now, it seems. But that was the number one thing that kept coming back to me. People who struggles with breaker blocks first, and then they would struggle with inversion fair value gaps and just spotting them. Truth is, this is your best friend, the dot, or if you prefer, the cross. Because you can just line up your thing on, let's just say you didn't have a wonderful indicator that draws it for you, right? Let's actually just, you know what, let's hide all indicators right now, right? Oh, this is a breaker block, cool. So now I can just place my mouse over, and then if I look to the right, I see, no fair value gaps. And if I look to the left, inversion fair value gap. There's also, I think there is an extended ray that goes both ways, horizontal line right here. So you could just do this, and then I see, hey, look, inversion fair value gap right here. And of course, the indicator for me, I do have the setting that includes the volume imbalance within fair value gaps. So it is a little bit larger, but here you'll notice that if I turn that off, where is that? Right here. It's going to load and then showcase. It's a little bit smaller, gives you a better entry, but that's not how I personally trade. I think there is a video breaker block in the resources if you have struggled with breaker blocks. Yes, there is, Justin. There is. But it's more so IFVG unicorns that he said. You use the whole wick to draw your breaker block or just the body. I use the entire candle, and even more often, I will use this setting right here. So instead of using just the last candle of the same direction for the breaker block, I like to use consecutive candles. But the truth is, when we're reviewing trades, like, it can draw a lot of things on your chart, right? So for example, here, instead of this candle being the breaker block, it's these two consecutive candles, and this is the whole breaker. When I trade it, I like to have that. You can also see an example here. But whenever I'm reviewing charts, it can get a little bit full. And using the full range, of course, as well, will draw a lot of things on your chart. Why does the Indy not highlight this IFVG? What do you mean? What IFVG? So you're looking at 6:30-ish? What time frame are you on? Magic, I think are you on a different time frame? No, that's the 1 minute. What IFVG? This one? This one right here? Just because it found an IFVG that it retraced into. So the unicorns are based on trading them, all right? So how it works, you'll see right here, as you can see from the little signal down there, right? I do use signals. So this tells me, okay, at 9:30, we formed a breaker block. Cool. What is the nearest one to this price, right? Because this is where price is. What is the nearest one? This one. So we're going to retrace into this one before we retrace into this one. So if this guy wasn't here, then it would indeed consider this one as a unicorn. But it doesn't draw all unicorn. It draws the first one. If we retrace into it, well, then in that case, it is no longer looking for a unicorn because it found an entry. So not the first one that is formed, but in this case, both this unicorn and this unicorn would have been formed on the same candle. And so it's only going to consider the one closest to price, and price at that time would have been at the close of this candle. So this is just an efficiency filter, I guess, is the best way to put it. And as we said, right, we have the long, we have the short, and then we did have a lunch raid as well. And I'm not going to lie, after SMT is formed here and the gap is fully filled, you might think, hey, well, I have a great long setup opportunity now. Yes and no. Now, why am I saying no? Because of this. Because of how close we went here. But the truth is, if you look at it, this is just SMT. Still, we are engineering liquidity to the sell side. So if I was too long, I would have considered ES more so than NASDAQ. But you might notice the result on NASDAQ was actually better, right? We can see this just from NASDAQ reaching its lunch high while ES did not, well, failed to reach it. So a little bit of all over the place in that case, I'm not going to lie. But let's look at and let's consider trading the PM session after the lunch, right? So in this case, we're looking for bullish setups only. Lunch low got taken, statistical probability of reaching lunch high. Once again, statistical range frameworks. You have your framework, SMT to confirm your timing, which came. And so I'm just looking for the first bullish, available bullish entry, right? Now you might notice, hey, well, look, Holly, this is a breaker block. Oh, why is this all black? All right, this is a breaker block right here. I haven't used this template in so long. Wow. Let me just remove the text so we can see something. So why is this not a unicorn and why are we not entering here? Well, very simple. In the indicator, I have something called a range lookback. It only considers the 3 most recent ranges in each direction, which means at this point in time, there are too many bullish ranges that were formed, right? I mean, I can count with you guys. This is going to be 1. This is 2. This is now 3. And this one makes it 4. So no, I'm not going to consider this range for a potential breaker block. As is explained here in the tooltip, shows that lower lookbacks will find less breakers, but they will find them closer to reversal points. This is how I personally like to trade. And see, in this case, the first entry that it would have provided would have been right here. If I missed the first, I missed the trade in my book. Yes, sir. 100%. And as you can see, this would have led to a clear stop loss. So let's mark it out. So you have your inversion fair value gap. Then you have fair value gap, and you have the order block here with the swing low. Of course, you guys know if their order block overlaps with a swing low, is nearby. How do I say this? Side to side, I guess, is right before, right after a swing. I'll use the swing. In this case, it would have been a pretty, well, not so quick actually, but a clear stop loss, right? Still, you had another available entry that came right after. Well, right after, I mean, what is that, 20 minutes-ish? I didn't trade the PM session at all. 30 minutes after. If we look here, 3PD array stop loss rule, you have fair value gap, inversion fair value gap, order block. So your stop is actually pretty tight here, pretty nice. And once again, the lunch rates coming in clutch for some pretty amazing returns. I did code a bot recently about lunch rates only. I never had it only lunch rates. and it's pretty straightforward. It's on the lower end of the win rate, but the RR, the risk to reward, covers that. And once you get in a streak, I don't know if you guys trade the PM session quite a bit, but there are some pretty insane streaks that come with trading lunch rates. Overall, it would have led to one loss followed by a win. Not looking to consider any shorts. Once again, statistical framework, higher time frame bias tells me new week opening gap is now reached and SMT is present. I have every single reason to go long here, which would have led to one loss followed by a win. Of course, very positive risk to reward exchange here. If we're talking about partial objective along the way, I would definitely look to partial before reaching said lunch high. Go to a 5-minute chart. I got my range. I'm going to look at the first premium in efficiency. In this case, it would be this wonderful order block right here. This is my first premium in efficiency. This is where I would look to partial. And just to that partial, let's look at it. If I can zoom correctly, just to that partial, we're seeing this is not the right level. I'm going to get it, guys. No worries. Just a close of this candle. It is 2.71 R. So if you took half, you have 1.35 realized R here, which means you reimburse your loss and you're up 0.3 R in profit. And if you took off the other half at lunch highs, I'm going to round up to 7 for ease. You're up 3.8 or something, 3.7 probably realized R for the afternoon, which is pretty great results when, as you guys probably remember, I look to average 7 R a week. That is my personal target. So very straightforward day. It was a smaller range day after the London session, right? For a New York session. A lot of back and forth here. But if you only focus on the high probability frameworks, then I mean, it's win-win, one loss, and big win. I personally didn't trade any of those. I traded both morning trades, and I had a little bit of a shittier exit on this one. I'm not going to lie. I took all of my exits here, and I did take an earlier partial. Why is that, you may ask? Because I had other work to do in real life, and I could not be on my setup or trading on my phone, as I do have multiple accounts. So I had to place everything automatic and be very conservative on that second trade. You made a tough, choppy day look easy. I'm all for it. Let's go. Love to hear it. That was the one and only goal behind my model. I think I've said this multiple times before. It's all about simplicity and consistency through that simplicity for me. And of course, this is not simple. I'm not saying it's simple overall. It is simple within trading limits, right? Trading is not made to be simple. It is complicated. It is hard. But through a simple, repeatable framework and statistical edge, you can be profitable. It is one of the ways, right? What can I say? It is the way I chose, and it is the easiest one for me. Glad that you can see the simplicity and, as you say, right, made a choppy day look easy. Very happy to hear that coming from you, Magic. Appreciate that. Do we have any final questions before we call it a day? As Magic just said, just a choppy day, but focus on what's important, and you can find the profitable setups for that day. Just follow some rules. All right. Doesn't seem like there are any questions. I see a few of you guys typing. I'm going to give you all a sec. See if there's anything you guys want to add. If not, what you be looking for tomorrow? Well, now we fill the gap. We formed a range. Let's fuck up both sides of that range. But to be honest, during the weekly outlook, I shared two possibilities. The one I like the most here is trading lower now. And if we look here, I mean, I pretty much predicted exactly what we would be looking for, but I'm going to wait till the end of the week to tell you guys, hey, look, once again, just giving you guys a weekly outlook, and it's perfect. But this is what I'm going to be looking for. This would be my best bet. I would like to see bearish price action. Just this final retracement higher is kind of scary, but I guess we'll have to see from there. Right? Jog my memory about your stop loss. You used the loss of the breaker block, the first candle. No, none of these. None of these, Peacock. I used a 3 PD array stop loss rule. Did I just remove every single drawing? What did I do? Okay, no, I did not. Sorry, I just got in my head there for a sec. But no, I use a 3 PD array stop loss rule. Well, what is that thing that I said really too quick and did not sound like an actual English word? Well, it's just I count those PD arrays. Oh, I know, I'm just asking about the low of those PD arrays. Well, yeah, I'm basically allowing for their invalidation. For example, here, if I'm taking a bullish setup, then I'm going to use the low of the fair value gap. And in the case of fair value gaps, I use the candles low. The first candle of the FVG. So no, basically fair value gap or inversion fair value gap is a 3-bar pattern, right? I use a middle candle, which I call the fair value gap bar, right? Or the fair value gap candle if you prefer. But as a coder, I'm used to working with bars instead of calling them candles. Does that answer your question? If it would be bearish, then in that case, it would be a little different. I think that's what actually you referred to at the end of your message as the displacement candle. I just call that a different thing. That's what's confusing with trading nowadays, with so many people sharing so many of the same concepts, just calling them different things. You can call it the middle bar if you prefer. Hopefully that does answer your question. Then the low of the breaker block. Well, if I don't have 3 PD arrays, I'll use the low of the C point of the breaker block. And that is explained very greatly in my model video. By the way, if you're having issues, in the rice trading model video, right, which you can also find linked in resources, but it's pinned on my YouTube channel, right? You can find basically how the 3 PD array stop loss is used. And also what I mean by the C point is you form the range and then the manipulation of that breaker block. This is what I call the C point. So I never want my stop loss to be past the C point of the breaker block I'm trading. My pleasure. On that note, we're going to call it a night here, guys. Thank you all for showing up. Appreciate it very much. Hope you find a lot of value within these calls. And we'll see each other back tomorrow for another one of our price action reviews. Have a great night, guys. Enjoy and good luck trading tomorrow.